There was a time when Bitcoin's price was $0. There will be a time in the future when you'll be able to buy 0 Bitcoin for a US dollar. In this video, I want to explain to you why I think this way. Let's get started. I got this question on one of my videos and I want to answer it. The question is, what's the rationale for believing that Bitcoin will end up being 90% market cap of all asset classes? It's performed very well for years, though volatile, and has been resilient. But most people, especially those with assets, still believe it's a greater fool theory. Why would they sell their real estate investment in exchange for that? There's no new information that dissuades asset holders. This comment was under a video where I talked about this chart here. This is a chart from Jesse Myers on Twitter. Bitcoin is only 0.2% of global wealth. Bitcoin is $2 trillion, while gold is $22 trillion. Art, cars, and collectibles are $27 trillion. Equities are $135 trillion. Real estate is $370 trillion. Bonds are $318 trillion. Money is $129 trillion. I personally think that all of these assets are going to increase in value, but Bitcoin is going to increase much faster. So we have in total today 1,000 trillion or $1 quadrillion worth of assets. I think Bitcoin is going to take up a very, very large percentage of this. I think that this number is going to trend to 100%. So it may not really reach 100% because there will always be people who believe real estate is valuable. There'll always be people who believe that bonds are valuable as money, equities, money, all these things. So there will be people who believe these things are valuable. So it'll trend to 100%, but it may not entirely reach that. But at the same time, it could still go to 0 Bitcoin for each US dollar because over time, the value of the US dollar keeps decreasing and fewer people want to sell their Bitcoin for dollars. The number of people who are buying Bitcoin and putting it in cold storage and then never selling it is increasing, and it'll keep increasing forever. They're never going to sell that Bitcoin again. The reason why I think that Bitcoin is going to 90% or more of global assets is because Bitcoin can fulfill all of the functions of money. It has all of the characteristics of money. It's the only asset in the world that can fulfill all of the characteristics of money. All of these characteristics are necessary in order to make sure that we can use money for all of its functions. So we need to be able to give somebody else value if we want to buy value. So we should be able to trade our value. We need to be able to use it to account for value. That's where fungibility comes from. So if you can't assume that every dollar or every Satoshi or every ounce of gold is going to be exactly the same, then you can't use it as money. You need to be able to move your money around because now we are in a global economy. So you should be able to transact with anybody in the world if you want to buy something that they have of value. If you have money that's not durable, then of course it doesn't last. You can't save for it for 10, 20, 30 years into the future. Over time, humans have evolved and we've increased our lifespans to a point where we need our money and our savings for a longer and longer time. In the past, maybe we only needed it for a few years. Now we need it for 30, 40, 50 years into the future. Money also needs to be divisible because if you can't split it into smaller units, then you can't pay for smaller things with that money. You should be able to buy a house and you should be able to buy an apple with the same currency. Money also has to be scarce. If it's not scarce, then you can't save in it because if somebody else can print it and you're accepting it for things that you create, let's say you put in your time, effort, energy, you work for a company and then they can give you money that they printed out of nothing, they have an arbitrage opportunity because they can just print this thing out of thin air and you want it and they can get everything that they want from you in exchange for what you want. So they'll keep paying you, they'll keep giving you more and more of this thing that they printed out of thin air and you'll keep getting more and more, you'll keep getting raises. But the issue is that the value of everything that you're getting is decreasing. And this is what most people don't quite understand. Most people think that US dollars are scarce, but no, they're abundant. They can be printed. The wealthy, the people who have assets, can go to a bank and they can get the bank to print more dollars for them. So when you're getting paid for your time, your energy, your effort in US dollars, you're the arbitrage opportunity. Your labor, your time is being taken from you basically for free if you're earning dollars because those dollars can be created out of nothing. And over time, the value of those dollars is decreasing and decreasing. And we found ways to make it so that the value it gets extracted, but it's not extracted so fast that everybody realizes. So let's say, for example, if your cost of living increased at 50% per year, you'd probably notice it very quickly. But if it increases at 2% per year, you think it's normal. You think that that's how things are supposed to be. So you never question it and you keep earning dollars. You keep working. You keep exchanging your time for dollars instead of looking for alternatives. And the next one here, decentralized. We want our money to be decentralized because we don't want other people to cancel it, to stop it from working, to take it away from us. Fiat currencies, which the US dollar is one of, are not decentralized. They're controlled by a centralized entity who can do whatever they want with it. They can create more, they can cancel your money, they can take your money away. They have full control of the banks that hold your money. So it's not even your money in the first place. It's not decentralized, it's not yours. And the next one, saleability. I used to think that gold was high on saleability because I thought everybody in the world wants gold. But I thought about it over time and I came to the conclusion that dollars are actually more saleable than gold because more people in the world want dollars. It's very difficult to verify gold. It's very difficult to move it around. If you wanted to pay someone in another country with gold, you can't because you can't put gold on the internet while you can put dollars on the internet. So more people are willing to accept dollars. More people are recognizing that dollars have value than the people that recognize that gold has value. So if you go to a random merchant, they're more likely to accept dollars because they're easier to deal with than they are to accept gold. And the last one here, verifiable. The currency that you have or whatever thing that you have could have all of these characteristics, but if it's not real, then there's no value to it. With dollars, it's pretty easy to verify. If you accept dollars on the banking system, then you know that they're real. But if it's physical dollars and you have no idea if it's real, people have made better and better fakes. And over time, they've improved and improved until it's nearly impossible to verify if a really good $100 bill is real versus a real $100 bill. So verifiability is very difficult for dollars, physical dollars. Same thing with gold. If you got a gold coin from someone, you don't know if it's fake, you don't know if it's pyrite. It might make a certain sound, but I mean, not everybody knows about that. So gold is very difficult to verify. There was a phase in the 1600s when tulip bulbs had exploded in value. People started speculating on them. So even today, a lot of people think that you can use tulip bulbs instead of Bitcoin as money. But let's take a look at the characteristics of money. So pretty self-explanatory here. Tulip bulbs are not all fungible. Each one has different colors. You don't know if the tulip bulb that you have is actually going to have flowers. What if it's a dud? Tulip bulbs are not portable. You can't put them on the internet. You can't spend them. You can't pay Amazon with them. Tulip bulbs are not durable. They go bad, of course. They're not divisible. You can't break them into smaller pieces. You can't atomize them and then pay for things. Impossible, because they would have no value then. Next one, scarcity. Tulip bulbs are not scarce. At the time they were, but now they're abundant. Tulip bulbs are decentralized, so I'll give you that. Anyone can grow them, anyone can hold them. Nobody else has a record of who owns them, so they are decentralized. We'll say that that's true. Next one, saleability. Nobody's going to accept tulip bulbs for a transaction. Verifiable, moderate, because you don't know what colors you're getting. You have no idea what you're actually getting. Next one, trading cards. I'm not going to go through the details on all these, but trading cards are low on fungibility, portability, durability, on almost everything except scarcity. Even scarcity, you're relying on somebody else to print those cards and to tell you that they're scarce when they may not really be. So, for example, if you have a Wayne Gretzky rookie card, you don't really know how many of them are made. You don't really know how many of them exist. You're relying on somebody else. You don't know if they're actually limited in supply. They may be, but you have no way to verify that. And the next one, artwork. It has none of the characteristics of money except being scarce. If something doesn't have a balance of these, then it can't be used as money. How are you going to spend a Picasso on paying for something? You can't. You're using it as a store of value, but you can't use it as a medium of exchange and unit of account. So something that we use as money has to have a balance of all of these characteristics. Out of all of the things that we have here, we can see real estate, stocks. Stocks are okay. They're better than a lot of the other things, but they don't have all the characteristics of money. We can see here out of all of these things, we have luxury watches. I did Beanie Babies. We have bonds as well. Bonds were a part of that list. Out of all of these assets, the only things that can even remotely be used as money are US dollars and gold. Because again, even stocks, they're better than everything else, but you can't really move them around. They're not decentralized. portability, I mean, you can access them from anywhere, but you can't give them to someone else. You can't trade them between your account to somebody else's account. You have to tell your government, you have to go through your brokerage. So there's no real freedom here. I would even say this is a low. Let's go with low here instead of high, moderate. But gold and US dollars work pretty well because they have a balance. But now let's take a look at Bitcoin. I'm going to scroll down a little bit. It has all of the characteristics of money. The only thing that it doesn't have is a history. It hasn't been around for thousands of years like gold. It hasn't been around for hundreds of years like US dollars. There's no army behind Bitcoin forcing people to use it, unlike US dollars. So US dollars are forced saleable. You're forced to take them. On the other hand, with Bitcoin, you have all the characteristics of money, but you're not forced to take it. You don't have to adopt it if you don't want to. And that's what makes Bitcoin's adoption so powerful. The people who own it because they want to. The people who own US dollars own it because they're forced to. The people who own real estate, they own it. They own excess properties because they're forced to. If they didn't own real estate, then they'd be holding dollars and the value that they have would be slipping away. Same thing with stocks. Most people don't want stocks. They just buy them because they want to diversify. Stocks are extremely risky. A company could go to zero. You have all different kinds of risks that exist with stocks, but they don't exist with Bitcoin. The closest thing to Bitcoin on this list is US dollars and gold. But US dollars don't have a scarce supply. US dollars are better than gold for certain things, but for other things, they're way worse. So US dollars, they can be printed, gold can't be, but we have no idea what the supply limit is. So let's take a look at Bitcoin again. We can see here, Bitcoin combines all of the characteristics of US dollars and gold that we want. We want these characteristics. Gold has some of them and US dollars have some of them. Bitcoin has all of them. The saleability will improve as time goes on. That's not something you can rush. That's just the adoption. Over time, there will be adoption. So the two biggest asset classes on this chart have really no reason to exist as assets. People shouldn't be buying real estate to save value. Real estate should just be a liability. It's something that you use, you consume. The price of real estate shouldn't be going up over time. Our houses wear and tear. I get it. There's a finite amount of land, but land is abundant. We have way more land than we need. We have so much land that's just empty. Real estate should not be this big. Bitcoin will take a massive amount of real estate's market cap. And the reason for that is that real estate has a lot of headaches involved. There's a lot of different things that you don't have with Bitcoin. So, for example, you need to deal with realtors, you need to deal with tenants, you need to deal with your government. If your government says your property taxes are going up, then you're kind of screwed. Same thing with bonds. People wouldn't buy bonds unless they had to. They want bonds for short term stability. So they want cash flows and they want to make sure that whatever value they have is maintained. If they just hold money, the money is going to be devalued over time. It's going to be debased through inflation. More and more is going to be printed, and the money that you have is going to decrease in value. But bonds pay you an interest rate. So because of that interest rate, you're kind of protected, but not really, because the interest rate probably doesn't even pass inflation. Inflation is 7 to 10%. Bonds are paying you 3, 4, 5%. So this entire $318 trillion can technically go into Bitcoin, just because if we go on a Bitcoin standard, then there's no volatility. Bitcoin is not going to be volatile on a Bitcoin standard. In terms of US dollars, it is volatile, but Bitcoin is a completely separate system. You're measuring Bitcoin from a system that has no relevance to Bitcoin. Bitcoin is a completely separate economy. It's a parallel economy. It's not part of the legacy economy. A lot of people think that US dollars and Bitcoin don't compete. Of course they do. You can use Bitcoin as a medium of exchange. You can pay for things with Bitcoin. You can go to Steak and Shake and you can pay them with Bitcoin or US dollars. You can't pay them with equities. You can't pay them with bonds. You can't pay them with real estate or gold. They're not going to accept gold coins, but they will accept Bitcoin. If you accept Bitcoin, you're giving your customers more ways to pay. So you're incentivizing them to spend the value that they have at your business. Today, a lot of people buy real estate because they know that dollars are going to decrease in value. And on top of that, they know that you can borrow against your real estate. So if you buy a house, you can go and borrow against it. The issue with real estate is that if you need to leave the country in a rush, you can't take your value with you. You can't take your real estate with you. You can't take your house with you. You can't put it in your pocket and leave. So if you have a $10 million, $100 million portfolio, a real estate portfolio, what are you going to do if there's a World War III and you have to evacuate your country? You can't. There's absolutely nothing that you can do. Your real estate is gone. On top of that, if your government says we're going to increase your property taxes, the value of your real estate immediately decreases because the cash flows from your real estate are going to go lower. There's something very similar with bonds and equities. If you want to leave the country, you have to go through your brokerage to sell your bonds and equities for money, because you can take your money around, but you can't take your bonds and equities around. You can't go across borders. Your bonds and equities stay in the country that you bought them in. So if you bought them in the US, let's say you have Schwab as your exchange, BNY Mellon as your custodian. So these two are not portable. You can't move them around. While with Bitcoin, you can access it anywhere in the world as long as you have your 12 or 24 words. That's all you need. So Bitcoin is the only asset that can be used to fulfill all of the functions of money because it has a balance of all of the characteristics of money. Dollars and gold have all of the characteristics of money, and they've been used as money for hundreds or even thousands of years. Bitcoin is just way better. It's so much better that people are incentivized to hold Bitcoin instead of all of these other assets. The other thing that's really important about Bitcoin is that you can use it as collateral. You can give a bank your Bitcoin, they'll give you dollars, and you can then use those dollars to pay for things if you want to. Because Bitcoin can be used as collateral, it's going to take up a bigger and bigger market share of real estate. More and more people are going to want to own Bitcoin because it has all of the characteristics of money. It can be used as collateral, but it has none of the headaches that come with real estate. So as people start selling their bonds and real estate, they're going to start funneling that money into Bitcoin because it's so much better than everything else as a form of money. You have one asset that you can use as a medium of exchange, a unit of account, and a store of value. So because it has all of those characteristics, more and more people are going to pile into it. As the price of Bitcoin goes up, more people want it because they assume that it'll go up even more. So let's say Bitcoin's price goes to $1 million, more people will want it than the current price at around 100 and 304,000. Then if Bitcoin goes to $10 million, that would mean that it's probably the number one asset in the world. More people will want it because it's the number one asset in the world. If it's the number one asset in the world, it'll probably continue to be the number one asset in the world. And this just becomes a self fulfilling prophecy. People see that Bitcoin is the best performer, so they want the best performer. The growth will accelerate as the price goes up. This is what I think, at least, because more and more people will want it. More and more people will want to have it in their portfolios. Today, it may seem crazy to own Bitcoin because it's digital, nobody's accepting Bitcoin. But when it's $10 million, do you really think that Wall Street is going to be saying that Bitcoin is dying? Do you really think that CNBC is going to be saying that Bitcoin is dying? Probably not. There's going to be a lot more people in line to buy it at $1 million, at $10 million, at $100 million than there are to buy it today. And keep in mind that the root of all of this is that Bitcoin is a finite asset. You can create more dollars and you can dump them into Bitcoin, but you can't create more Bitcoin and dump it for dollars. So more and more people will be willing to create more dollars to borrow against their real estate to buy Bitcoin, but fewer and fewer people will be willing to give away their Bitcoin for dollars. Bitcoin is the best asset in the world, and because of this, it's going to go to infinity US dollars. There's going to be a point where US dollars are just seen as a collectible. They're going to be seen as something that nobody even wants. I don't know how long that's going to take, but eventually, why would people want to be paid in something that can be created out of nothing? And the only reason why we have to buy real estate, why we have to buy stocks, why we need cash flows is because the US dollar is constantly decreasing in value. So we can see here, why would they sell their real estate in exchange for what they think is a greater fool theory? They can think what they want to. That's perfectly fine. The value of their real estate is going to keep decreasing in terms of Bitcoin because of the characteristics of money. And the longer they hold off on it, the longer they hold off on caring about Bitcoin, on focusing on Bitcoin, the more value they're going to lose. So they can do that if they want to. That's perfectly fine. They can keep ignoring Bitcoin. But eventually, the house that they have is going to be worth one Bitcoin. So today, let's say it's worth 5 Bitcoin. Eventually, it'll be worth 1 Bitcoin. Then it'll be worth 0.1 Bitcoin. Then it'll be worth 0.01 Bitcoin. We're already seeing this trend. At one point, houses were worth something like 6,000 Bitcoin, 600,000 Bitcoin. Today, they're worth 4 or 5 Bitcoin, the median house in the US. This number is going to trend to zero. It's going to continue to trend to zero. It's going to go to one. I would say within 10 years, it'll probably go to 0.5. Then it'll drop to 0.3, 0.1, 0.01. And over time, we're going to see that Bitcoin becomes a bigger and bigger portion of total global asset value. So let's say this goes to $10 trillion. Today, Bitcoin is 0.2%. At $10 trillion, maybe Bitcoin is 5%. From 0.2 to 5%, it takes up a bigger and bigger chunk of total global assets. And none of this requires the value of real estate to decrease. The value of real estate can keep increasing. The value of bonds can keep increasing. This doesn't require those numbers to decrease because those numbers are fake. More and more dollars can be created out of nothing. They can keep being added to the economy. All that this requires is total global asset value keeps increasing. Today it's at 1 quadrillion. It may go to 10 and it may go to 100. At 10, maybe Bitcoin is 5% of global wealth. So today it's 0.2%. At $10 quadrillion, maybe Bitcoin is 5% of global wealth. Then at $100 quadrillion, maybe Bitcoin is 30% of global wealth. So at $100 quadrillion, Bitcoin is worth $30 quadrillion. $30 quadrillion would mean that one Satoshi is worth $15, which is crazy. $15 per Satoshi. But at that point, what is $1 even going to be worth? So all of these assets would go from 99.8%. Today they're worth 99.8% of total global assets to 70%, then 60, then 50, then 40. As more people realize that Bitcoin is a better tool to save, and they don't need all of this. They don't need to make their life complicated. They can just hold Bitcoin. As more people realize this, they're going to want to access Bitcoin. They're going to want to hold Bitcoin. They're going to want to sell their time, effort, and energy for Bitcoin. So at that point, let's say you're still working a job. Today, you can earn 30,000 Satoshis an hour. At that point, you'll be able to earn 10 Satoshis an hour, 5 Satoshis an hour. You may only be able to earn a fraction of a Satoshi per hour. So over time, as more people realize that Bitcoin is finite, it has that 21 million supply, equities, real estate, bonds, they're going to realize that all of these assets are not needed. They're going to realize that Bitcoin is the only form of money that they need. And they're going to move all of their wealth from all of these other assets into Bitcoin. If they don't, they lose. So why is Bitcoin going to go to 90% or more of global assets? Because it's the best asset in the world. It's the only asset that can fulfill all of the functions of money, and it can be used as money on the internet. So Bitcoin used to be free. You could get Bitcoin for free. You didn't have to pay anything for it. You could pay $0. You can get some Bitcoin. Just press a button, you get some Bitcoin. But eventually, Bitcoin will be priceless in terms of US dollars. $1 will buy you 0 Bitcoin because people are going to figure out that Bitcoin is the best money in the world. They're going to figure out that US dollars are essentially worthless. They're just backed by trust. They can be created out of nothing. And the path to this could take between 10 years to 1,000 years. But eventually, I do know that everybody on earth is not going to want pieces of paper for the value that they create. If you have any questions about this, if you want to book a meeting with me, you can do that in the link in the description below. The best thing that you can do here, again, is just stack Bitcoin. That's all you can do. There's nothing else you can do. You can't force people to start adopting Bitcoin. You may be able to buy Bitcoin for them, maybe for your family, your future generations, but you can't force them to buy Bitcoin. All you can do is stack Bitcoin and just wait. That's it. Over time, people are going to figure it out. Over time, you're going to see the price of Bitcoin going up and you're going to see your purchasing power going up. Improve your lifestyle. Enjoy your money. Enjoy your savings. Put as much value into it as you can today. And eventually, you'll be able to buy whatever you want. You're never going to be able to run out of money. You're not going to be able to use the money that you have. You're going to be able to buy the biggest mansions in the world with less than 1 Bitcoin. So just accumulate. That's it. 0.1, 0.01, whatever you can get. If you can get to 20 million Satoshis, 10 million Satoshis, whatever you can get, just accumulate it. The best decision you can make right now is just to accumulate Bitcoin. Over time, you're going to see that it was the best decision because you're going to see the results. Give it some time. Give it at least 4 years, 8 years, 10 years, however long you can hold for. Just hold. Eventually, you will be rewarded.